Dear students, good evening again. We have started the concept of the share capital. In the previous lecture, we have discussed that what is the limited liability company, what is the concept of the authorized share capital, what is the concept of the issued share capital. The same concept we will continue. We will discuss some of the related topics also. We discussed about also the IPOs, that what was the initial public offer. So the same concept of the share capital we will continue. Just a brief overview. We have discussed that the company has a maximum, or what is the authorized share capital that is allowed by the government. That is how much? That is 100,000 shares, and one share is how much? The par value is $10. So it means the total amount, the authorized share capital amount is $1 million, and here we have a par value of $10. So in the start, through the IPO, through the initial public offer, company has issued and the paid up capital of how much? 700,000. So 70,000 shares they have issued, and the general public have purchased those shares, and some of the owners who are the promoters of the company, who have started the company, they have also some of the shares, and general public have the shares. So 70,000 total shares are issued by the company to those shareholders, and the total value of the share capital is how much? That is 700,000. Next, one more concept that we have is the concept of the right shares. Right shares means what? Right shares means the current owner have a first right to buy if the company is issuing the new shares. What is meaning by that? See, the company has total issued shares of 70,000. Let's say the company want to issue 10,000 more shares. Now these 10,000 shares company want to issue. Who has the first right to buy the share? Obviously the current shareholders. They give them a right. Let's say, for example, 1 for 7 means any person who has a 7 shares already, he or she who is the current owner, they can buy how many new shares? They can buy 1 new share at, for example, at $15 per share. Now this is right, this is the right given, the right shares are given to the current shareholders. Now it is not mandatory that all of them will buy, some of them will buy. So they have given an offer to the current shareholders that if they want to buy a new share, they can buy 1 new share for every 7 shares currently they have. And what will be the price they have to pay? The $15 per share. Now this is the basically the right issue price which they are given, or they are offering to the current shareholders. So why? Because maybe possibility that the current market value of this share may be $20. Means currently shares are selling in the market. Market means here the stock market, the stock exchange. It is how much? $20. But they are giving an offer to the shareholders who are the current shareholders or the current owners of the company that if you want to buy 1 new share, so you can buy it for how much? For $15. But still it is above the par value. What was the par value? It was $10. So they are receiving $5 extra, and we have discussed it in the previous lectures, that is the premium $5 they are receiving. So this is what, this is the concept of the right share, but this is just an offer to the current shareholder. It is not mandatory that all of them will buy these shares. Now the next thing is what? The next thing is the concept of the dividend. Whenever the company is starting, what is the main purpose? For every business, the main purpose is to get the profit. And whenever the investor, the owner, the shareholder is investing in the business, why they are investing? Because they want some profit from that. And obviously all the profit company is not giving to the shareholder. Some of the profit they are retaining with them, and some of the profit they are giving to the shareholder. So dividend is what? It is the distributed profit. It is what? It is the distributed profit. And distributed among whom? Between the shareholders. There may be 100, there may be 1,000, maybe million shareholders. So this is distributed among the shareholders. So the profit which is distributed among the shareholders is called as what? As the dividend. Okay. Now, and there is something that is called a reserve also. Reserve may be some specific reserve, or it may be a general reserve, but currently we are just talking about the general reserve. This is also the part of the profit which is not available for distribution. Means they want to keep some of the profit separately, and they don't want to distribute it to the shareholders in the form of the dividend. So that profit is called as what? As the reserve, and they cannot give the dividend from that reserve. This concept again will be more clear when we will discuss about the retained earning, the concept of the unappropriated profit or the retained earning. So this will be more clear. But until now, we have discussed that how much is the share capital of the company. They have a 100,000 shares issued. No, they have a 100,000 maximum share capital, authorized share capital. Of that, total 1 million is there. So issued capital is only 700,000. So 70,000 current shares are issued, and then they have given the right share. So we just ignore that their new shares are issued or not. So we just assume that currently they have a 70,000 shares issued, and the total value of the issued and the paid up capital is 700,000. Now, the concept of the retained earning. Retained earning is simply the profit which is still undistributed or unappropriated profit. Means the profit which is not distributed among the shareholders will be considered as what? As the retained earning. So this is a simple, you can say, the format of the retained earning. Just for the understanding purposes, because as per the International Accounting Standard, what is the format we will discuss in the later lectures when we will discuss all these statements as per the International Accounting Standards or International Financial Reporting Standards. But this is just for the understanding purposes. We have an opening retained earning. Opening retained earning, then we will add any net profit or earning after taxation. Again, how this earning after taxation is calculated? So this is calculated through the income statement. Then any dividend we have that is distributed to the shareholders will be deducted. It will be subtracted, and any amount that is transferred to the reserve, again it will be subtracted from that. So that will be the closing retained earning. Now we just start that the company or this business is started in 2018. So there will be no retained earning opening balance. So we just consider it as a 0. Let's say they have a total net profit for this year is 100,000. Out of this 100,000, they just distribute the dividend of 70,000, and they just keep a reserve of 10,000. So 10,000 they have reserved, they have kept aside, and then they have a dividend that they want to distribute to the shareholders, that is 70,000. So the closing retained earning, that will be how much? That will be 70 minus 10 also. So it will be 20,000 retained earning. Closing balance will be there. So out of that total profit, 100,000, some of the profit they have distributed to the shareholders, and some of the profit they have kept as a reserve, the general reserve here we're talking. So they have a 20,000 amount available that will be considered as what? As the closing retained earning. This is the profit which is still available with them. So this balance, the closing balance of 2018 will obviously transfer to 2019 as an opening balance. So it will be 20,000. Now let's say the next year they have a profit of 150,000. So it will be added. And then, for example, the same dividend they give next year also 70,000, and 20,000 amount they have kept with them. So how much will be the retained earning at the end of the second year? So we have already 20,000, that is the opening balance available, and current year they have a total profit of 150,000. From that they have 20 and 70 that is separated, that is kept a reserve or it is distributed. So the closing balance of the previous year was how much? 20,000, 2018. It is transferred as the opening balance of 2019. In 19 they have a profit, for example, of 150,000, and then they have again the distributed as a dividend of how much? That is 70,000, and they want to keep a reserve of 20,000. So it means the closing balance of the retained earning will be 80,000. This is how the retained earning is calculated. Let's say we just calculate for one more year, that is for 2020 also. Now the opening balance is 80,000. Now there's a possibility that the company may have a profit or may have a loss during the year. So let's say that they have not a profit, they have a loss of 30,000. Now this is the point we should understand, that 80,000 is the opening balance and they have not a profit this year, they have a loss. How much loss? Net loss of 30,000. So the balance in the retained earning will be 50,000. Now the point is, they should give a dividend in this year or not. It depends on the policy of the company, it depends on the board of directors, it depends on the shareholders that they want to give the profit as a dividend or not. This year they don't have a profit, but still if they want to give, they can give. We just assume that they give a profit of a dividend in the form of the dividend. They want to distribute that 135,000 and they don't want to keep something as a reserve. So 80,000 is what? That is the amount which is available with them at the start of the year. Out of that 80,000, this 30,000 they have a loss, and 35,000 again they are distributing because they don't want to make some negative impact on the shareholders. So they have given a dividend of 35,000. Means even they have a loss, but still the company can distribute the dividend to the shareholders to keep their morale high. So in that case, out of that 80,000 they have used this much amount, like a 65,000, but still the closing balance is 15,000 in the form of the retained earning available with them. So this is the concept, that sometimes the company has a profit, sometimes company has a loss, but still even in the case of the loss, if there is some balance available with them in the retained earning account, so they can distribute some of the profit.